Another day, and once again, Bitcoin is hovering around 58K. Are we destined to stay in this range forever? If Bitcoin is boring you to death and you're ready to throw in the towel, hang in there, because in this video I'll reveal that there's nothing new under the sun, and why all signs point to Bitcoin rewarding the patient hodlers very soon. I'll cover where exactly we are in this cycle compared to previous ones, and why Bitcoin can be so mind-numbingly boring, and why this is actually a good thing. Just when you thought we got past 58K, Bitcoin pulls us right back in. After starting off the year on a rocket ship, Bitcoin has completely cooled off and has been range-bound between 50 and 70K per coin for 6 months. Kind of feels like 6 years, doesn't it? Everyone is bored, and once again the doubters and the fudsters have come out of the woodwork. This first one from the dividend breeder, who says, Bitcoin was trading near $59,000 in March of 2021. Today, in August of 2024, it's trading near $59,000. Are we sure Bitcoin is the next big thing? And another one, this one from Lawrence McDonald, says, Bitcoin, August 2024, 62,000. June 2024, 62,000. April 2024, 62,000. February 2024, 62,000. October 2021, 62,000. April 2021, 62,000. And he has a little asterisk at the bottom saying inflation up 30% since 2021. All you really need to do is zoom out to deflect these disingenuous digs. They use cherry-picked dates, usually in the blow-off top peaks of cycle highs, to paint the picture that Bitcoin isn't going up in value. My favorite response to that last one was from Matt Dines, who shows Bitcoin's road to nowhere by showing its boring flat price from 2013 to 2016, $500. It's true. The majority of the time, Bitcoin is slow, boring, sideways, or down. And then it blows faces off with huge parabolic moves up. The mind-numbingly boring nature of Bitcoin for the vast majority of the time is exactly the reason why you have the opportunity to buy any at all. If it just went up in a steady straight line, it wouldn't be the slow, methodical Trojan horse that it is. Now let's take a look at some charts and data to show why this forever 58K consolidation is nothing to panic about. First up, let's look at the Bitcoin price at where we are today, 130 days after the halving, compared to the same place in past halvings. As you can see with this chart, besides the first halving of 2012, where Bitcoin's market cap was magnitude smaller, the price didn't take off until around 200 plus days after the halvings. Next up, let's look at this one from the Rational Root, showing a comparison of past cycles from the cycle bottom to where we are currently in what he calls the recovery phase, which tends to last about 2 years. As you can see, we are currently outperforming previous cycles during the same 2-year recovery phase from the bear market bottoms. Judging from this, we are still 100 or so days away from exiting the recovery phase. And what tends to come after the 2-year recovery phase? According to Root, it's the 1-year parabolic rise, which is then followed by a 1-year drawdown in his 3 stages of a 4-year Bitcoin cycle. Now let's have a look at this awesome animated chart from Wicked, which shows the number of days Bitcoin spends in a given price range displayed by its overall market cap. It shows Bitcoin spending around 2,000 days in a market cap range between 100 billion to 1 trillion. Which translates to a Bitcoin price between $4,700 and $47,000 per Bitcoin. As you can see at the tail end of the animation, we have only spent 315 days in a market cap range between 1 trillion and 10 trillion, which is where we sit today. If we expect history to repeat, we will be range-bound between 50,000 and 500,000 per Bitcoin for the next 1,700 plus days. What this tells me is that Bitcoin's performance should only be taken seriously over long time frames, minimum 5 to 10 years. If you aren't planning on holding Bitcoin for at least 10 years, you simply don't understand the asset yet. And this is precisely why it's so hard to grasp for most people. Instead of viewing it through the lens of a short-term gamble, we should be viewing Bitcoin over a long time horizon, not unlike something like a real estate investment. Cherry-picking snapshots of Bitcoin's price during small windows of time only highlight its extreme volatility, which everyone knows is the price of admission to the Bitcoin ride to financial freedom. One more chart to show why we should remain bullish even at eternal 58K is this one showing that exchange reserve balances have declined steadily and are down 12.5% since January of this year. This post on X from Preston Pish says it well. When price doesn't move but on-exchange supply relentlessly exits the exchange, you either sit up in your seat or you sit there like a dotard. And this one from BitPain. One of the least intuitive aspects of markets is that the only cohort of asset holders that impact price are the marginal buyers and sellers. There may be a vast cohort of people that own an asset who would be unwilling to part with it at 10x or 100x multiples of the current price. That deep market sentiment is completely irrelevant to the market price until the weakest handed cohort has run out of coins, at which point the price will gap up to the next substantial cohort of marginal supply. So the TLDR is hang in there and Bitcoin will reward you. It's not an easy game hodling. If it was, everyone would do it. We would all be financially free and Bitcoin would be at $1 million per coin already. This is a long game, so keep stacking the dips and don't let the boring price action shake you out. If you lack conviction, go deeper down the rabbit hole and keep learning. Okay, let's put a pin in this video with some wise words from Michael Saylor.
The best idea, if you want to make 10x your money, is you buy something that everybody in the world needs, nobody in the world can stop, and almost nobody understands.
Perfect.
Okay, so in 2010, that was Amazon, or that was Apple, or that was Facebook or Google. These are all dominant digital networks that everybody in the world needed, that nobody could stop. But if you'd ask the typical mainstream investor, is this a good investment? They would all say, oh, it's very scary, it's overvalued, Amazon doesn't make money, you know, mobile phones used to cost $50. You know, it's like Apple's going to sell an iPhone for $600. They said it's too expensive. The iPhone $600 is too expensive. Nokia will sell me one for $30. They said Apple's going to go to $30. And of course, what happened is Apple went to $1,500.
Yes.
And so the conventional wisdom was against these big tech companies.
So according to Saylor, you can 10x your money by buying something that 1, everyone in the world needs, 2, nobody in the world can stop, and 3, almost nobody understands. 10 years ago, that was Amazon or Apple. Today, it's Bitcoin. The question is, do you have the conviction and the patience to hold through the most mind-numbingly boring sideways action? So what do you think? How much longer are we going to be stuck at 58K? When breakout? I'd love to hear what you think in the comments. Like this video for the algo, and don't forget to subscribe to the Swan Bitcoin channel if you haven't already. Okay, that's it for the week. I'll be off in the wilderness for the long weekend, but I'll catch you right back here next week for more Bitcoin Signal. Also, don't miss a new episode of 21 Voices tomorrow, this one with Natalie Burnell about why we are so early to Bitcoin. Stay patient, my friends, and don't forget to touch grass this weekend.